Hi, this is Calvin here. Welcome to this week edition of Weekly Technical Outlook on the stock indices, where I'll be sharing with you all the latest technical configuration on the SPX 500, the Nasdaq 100, the Hong Kong 50, as well as the German 30 index. So before we start, we know that this week will be a relatively lower liquidity trading environment where the US stock market will be closed for the Thanksgiving holiday season on Thursday and will only be open till midday this coming Friday. Okay, before I jump into the individual technical configuration on the various stock indices that I'm going to share with you all later, let's take a look at the disclaimer slides first. Okay, first and foremost, let me share with you all the market breadth analysis on the S&P 500. This chart that I'll be sharing with you all will indicate the percentage of constituent stocks making new 4 weeks highs versus 4-week lows. The bottom of the chart will tell us this analysis, as the histogram bar in orange represent the percentage of stock making new 4 weeks high, and the histogram bar in turquoise green or blue at the bottom represent the percentage of stocks making new 4 weeks low. As we could see in the past 2 weeks, the percentage of stock making new 4 weeks low is negligible, but however, the percentage of stock making new 4 weeks high is not significant as well, as we could see that it started to decline in the last 6 to 5 days, which is not a positive sign for the S&P 500 in terms of market breadth. Now, let's take a look at the Nasdaq Composite market breadth. The number of stock making new percentage 4-week high is rather flattish, as we could see. Also, not an encouraging environment for the Nasdaq Composite. Now, one last interesting market breadth analysis I'm going to share with you all will be on the S&P. It actually tells us the percentage of constituent stocks above the key 200-day moving average. So what we could see based on last Friday's close is coming close to 89%. So what is telling us that 89% of the stocks in the S&P 500 index is now above the 200-day moving average. So since the 2016 major low, the extreme level that we see so far on this market breadth, which is the percentage of constituent stocks above this 200-day moving average, is at 83.86%, and as well as 86.4%, which is the peak in the January this year before it starts to see this dramatic decline reinforced by this COVID-19 crisis. And right now, the current level of 89% has already surpassed this significant overbought zone. So what does it mean over here? It telling us that the risk of a setback or a pullback increases at this juncture, given it's now above this extreme overbought level not seen since December 2016. All right, now let's move on to the individual technical analysis charts I'm going to share with you all. Let's start with the S&P 500 first. Okay, so as you could see, the key majors, so pardon me, the key major resistance to watch will be at this 2650/70, pretty much unchanged, which is the upper boundary of this expanding wedge. Now let's dive deeper to the daily chart. So on the daily chart over here, the SPX just started to do a kind of a sideways configuration, holding below this 3650/70 level. For our chart, the RSI, the 4-hour RSI is being kept by a descending resistance. And what I'm going to share with you over here is that given a weak market breadth indicator that I shared with you earlier on, and as well as the percentage of constant stocks on the S&P 500 is coming very close, is already at this extreme overbought level, as shown on the percentage of stock above this 200-day moving average. Hence, the risk of a significant pullback, I would say a multi-week pullback, or a consolidation actually increases at this juncture. So I'll be using 3670 as my key medium term pivotal resistance for this week to play a push down towards 3518. If we start to see a, a 4 hour close below 3518, it could take us down much lower towards 3418 level, which is this minor congestion zone seen over here, as well as the 61.8% retracement taken from the low of 30th of October all the way up to the current all-time high of 9th of October. But nevertheless, if we start to see a daily close above 3670, we will actually invalidate this setback scenario to take us much higher to actually print another new all-time high level at 3760 slash 70 level. Okay, now let's go on to the Nasdaq Composite. Pardon me, the Nasdaq 100. So as you see on the Nasdaq 100 daily chart, it's still being trapped by this descending range resistance, or in fact this resistance of a potential symmetrical triangle configuration that is in shape or has been evolving since 2nd of September 2020. Last 2 weeks of price action has been kept below this 12,180 level, which correspond to the upper boundary of this set symmetrical triangle range resistance, pardon me, as well as the range high or the range top of the swing high of 13 October and as well as 9th of October. Now let me share with you all the weekly chart, which is there's actually a interesting technical configuration that I want to highlight. Okay, on this weekly chart itself, it started to show this very unsightly candlestick formation that is does not bode well for the bulls to push the prices higher. So last week it started to show a kind of a doji candle formation, and prior week it started to show a kind of a spinning top, which telling us that the bullish pressure is kind of undecided, which actually increases the risk of at least a kind of a medium term or multi-week consolidation or pullback for the Nasdaq 100. So let's go on to the 4 hour strategy chart. Okay, so what I have over here is 12180 will be my key medium term pivotal support. So now I'm looking for a potential push down to actually test this recent swing low of 10th of November at 11,570 in the first step. If 11,570 is being taken down on the downside and our 4 hour close below 11,570, it could take us down to 11,100, which is the lower boundary of that symmetrical triangle configuration. And also the 4 hour RSI is also being kept by a descending resistance as well at the 55 level, indicating to us that the medium term to short term upside momentum is not present in the index at the moment. Now let's look at the Hong Kong 50 index. Okay, the key highlight to highlight will be this major descending resistance from its current all-time high, that is Jan 2018, acting at a resistance at 26,740, which is still pretty much intact. 4 hour chart, sorry, before the daily chart. Okay, let me share with you all two interesting technical elements on the daily chart. As we know that the price action is still being kept below the 26,740 major resistance level. What happened in the past over here was on 13th of Jan 2020, where it actually challenged this major resistance. And very interestingly, the daily RSI start to show a bearish divergence at the overbought level. Okay, what is a bearish divergence on the RSI? It telling us, or it has indicated to us a series of lower high, whilst price action show a higher high. So this tells us that the upside momentum has already started to wane or started to ease off, where there's a risk of a pullback or a setback increases at that juncture. So what's interesting over here is that yes, we start to see a test again on the 26,740 major resistance, which is this descending or a long-term circular descending trend line in place since the all-time high of Jan 2018. Pretty similar high on the RS or on the price action, but however the RSI start to show a very obvious lower high at this overbought zone. a similar observation that was seen in the early part of January this year. So what could happen that yes, we could start to see a potential setback or a pullback occurring at this juncture where such risk of a scenario increases. So let's go on to the 4-hour chart. No change on the strategy on the 4-hour chart. I'll be still using 26740 as my key medium-term pivotal resistance for this week to play a setback, a pullback towards 25,770 first. And if a 4-hour close below 25,770, we could see a further pullback or a setback to actually target the next support level at 24,950, which is the former swing high of 23rd of October, as well as this medium term pullback support of a former descending resistance that was in place since 6th of July 2020. So, but nevertheless, if we start to see a daily close above 26,740, we could we could see a further push up towards the next resistance at 27,940. Now, let's move on to the German 30 index. Okay, so pretty much unchanged as well for the German 30 index, as we know that since this push up, it has been kept by this descending resistance that is in place since this all-time high of 13, pardon me, since 12 February 2020. So it has been now capping the price action on the third time in a row at 13,320. Daily RSI still below a resistance level at 66 level. So moving on to the strategy chart, which is the 4-hour chart. So what I do expect is pretty much of a sideways formation, sideways price configuration, pardon me, at below this 13,320 level. So as long as this 13,320 medium-term pivotal resistance is not surpassed, I do expect another swing down to actually retest this kind of a short to medium-term range support level at 12,930. Unless we start to see a 4-hour close below 12,930, we could take us down a further setback towards a 12,700 level. But if we start to see a break above this 13,320, a daily close above 13,320 will invalidate this setback scenario to see a further push up to retest the current all-time high level at this 13,800 level. So to summarize everything, if we look at the major stock indices, key technical configuration, key technical configuration I shared with you earlier on, what we are expecting right now over here is a potential setback, not a major reversal yet, to actually retest the previous 2 weeks low level. So we are taking things one step at a time. So that's all I have for today, and I shall see you all next in my next trading video.